Welcome traders. This will be a very important trade video. If you're struggling with understanding market structure and reading price, this will be the video that you need to pay attention to. In this video, I'm going to be covering what usually moves the market and why some traders lose money. And it's not because they don't know how to trade, but they just don't know how to read price correctly. And without wasting time, my name is Rocky Calvin, and welcome to today's lecture. Without wasting time, understanding market structure has only two meanings. We are either bullish or bearish, or in other terms, we can be undecided. Undecided situation whereby the market is just consolidating. So I want to give you guys an example here, straight to the point. Every candle has an open, high, low, close. For example, let me start with this candle here, this one. This is the open of this candle. This is the low of this candle, sorry. And this is the close of this candle. And this is the high of this candle. I'm gonna rename them. This is the high. Guys, I tell you, if you understand whatever I'm gonna be talking about in this video, you will never ever read the price incorrectly again. In fact, losing will be, I don't know. It will be so hard to lose because you'll be able to read price and know that, okay, I need to stay away from this market. That's the close. Then this one is the low. Oh, sorry. What am I even doing? I think the keyboard typed something else up there. So they're supposed to be the low. So guys, just please bear with me and pay close attention. I've chosen this. How can I make this more? I want you guys to see that. I'm seeing like there's some which, okay, yeah, now you can see them. Okay, high, open, close, low. So what you have here, I'm using this candle of Tuesday 28th October 2025 on gold. And remember, you can use any asset. It doesn't really matter, bit Nasdaq and whatever. This is the low of this candle. This is the close of this candle. This is the open of this candle. And this is the high of this candle. Let me repeat it again. This is the high of this candle. This is the open. This is where we opened. So we opened here. We created that high. Then price started going lower. We went lower, created this low here. You're seeing this low here. After creating this low here, we came back in and closed in here. Okay? Now, I want us to understand the market structure based or starting from this candle here. And now for us to understand market structure, for us to understand where price is headed to, we have to use at least two candles. Meaning that we are gonna, for us to know where market is headed, we're gonna be using this candle in relationship to this candle, so for us to know where the next candle is gonna go. Be going to. So this is what's gonna happen. I want you to ignore the open and close for right now. Just ignore the open and close for right now. Just pay attention on highs and the lows, the highs and the lows, so that you can be able to understand market structure and also bias as well. Now, on a bullish market, we expect price to create higher highs. And on a bearish market, we expect price to create lower lows. Once you've marked the highs and you've marked the lows, anything that is above this high is a higher high. Anything below this low is a lower low. Let me repeat it again for you guys to understand. On a bullish market, we expect price to create a higher highs. If we are going higher, we expect price to keep on creating higher highs. But if we are going low, we expect price to create lower lows. So meaning that once we start with this candle here, we start looking, did we create a high above it or a low below it for us to know the next day where it's supposed to be going to? In this scenario, we created a higher high. This was the high of the previous candle. This is now the higher high. Just pay close attention with me here. You guys are going to get this. I know some of you maybe have learned about this in the past, but I just want you to just behave like a beginner, because maybe the person was telling you about this did not really go through some things on on the deeper level. So I'm gonna lock them, guys. The fact that the Wednesday 29th October created a higher high and we did not have any lower low, this showed us that coming 30th of October, which is now Thursday, we are supposed to be looking for buys, and that's exactly what happened. So again on Thursday, this is it. So on Thursday, we opened here, we created this low, then price went higher, meaning that the buys took over as per the market structure or as per analyzed here. I want you guys to take a closer look again at this. This is the low, this is the high of this candle. So for us to trade Thursday 30th, we are going to use the relationship between these two candles, these two first prayer candles, how they closed or how they created higher high or lower lows based on this other candle, so that we can be able to understand what to do on this specific day. So in this scenario, a lot of traders were seeing, maybe they were seeing this reddish kind of candles, and they're saying, we're going low, we're going lower. But they did not really know how to read this price correctly. Now, another reason why these buys were very supportive is because if you take a look at the previous days over here, we had a PD array. PD array is an ICT concept. This is the reason why this price went higher, because we came to balance an inefficiency down here. Once we balance this inefficiency down here, the first most important signal we had is we created a higher high. That was good. That was perfect. That was perfect. And exactly, see the next day what happened? We bought. If you had bought here, put your stop loss below here, and just targeting, I don't know, maybe this highs, this gap here, you'd have won this trade. And this trade was one made on those three scenarios whereby we balanced an inefficiency. But even if you did not pay attention to this, let's assume you do not understand ICT. Let us use just the common ones: the low, the high. We create a higher high, then the next day opens here. You start looking for buys in a lower time frame. Okay. Now, let us take a look at the next day. Now, assuming that in this scenario, we have already traded Thursday, and now we want to trade Friday. And remember, guys, Friday, I don't really like Fridays. Fridays is kind of a very, very tricky day, very, very tricky day, to be honest, to trade. Sometimes it does some damages that I don't really like. So I'd like to assume that we let go over Friday, but let us just see what would have happened. So in this scenario, for us to trade Friday, we're going to relate Thursday to Wednesday. So this is the high in this scenario. This is the high, and this is the low of Wednesday, right? So take a look at this. Price on Thursday did not manage to give us a higher high or higher low, and this is now what I call undecided market. In this scenario, and this is why I was saying that trading on Fridays, sometimes it becomes very, very tricky, because as you can see, we do not have any higher high or any higher low, meaning that we're just in there based on this candle close. So this only showed one thing, that price, we do not, it is more of a consolidative market pending to happen. So in this scenario, Friday was not really tradable. But now, let us now jump into the new week, this Monday. So Monday comes in, and based on and I usually like trading new week based on new week factors, not relating new week in relationship to previous week, especially when it comes to daily profiles. Because if you start using, for example, what really happened on Friday here, we created some higher highs. Okay, we created some higher highs here, higher highs in relationship to Thursday highs. Okay, and this was the low of Friday. Okay, so Monday comes in, and as you can see, Monday takes the low of what? Of Friday, meaning that we now created a lower low in this scenario. So when you create a lower low, Tuesday coming in, we're supposed to be selling, and that's exactly what happened. We not create higher high on Monday, we get lower low. So when we create lower low, we're supposed to be selling. So when you're supposed to be selling, this is exactly what happened. We opened here and price dropped down. And dropping down, you are supposed to be targeting the Monday's lows as target because of manipulation Tuesday. You see that? We closed in here. But guys, I want you to understand that this was a very dangerous move because understanding that we just balanced a PD array down here, this bullish fair value gap, and it's good it is marked. We just balanced it. So you trying to go against this PD array, which has already been balanced, and the next PD array is the one we have above here, this one here, is not such a good idea. It's a very low probability. Okay? So I want you guys to take a look at how Tuesday did exactly what Monday showed us to do. Like guys, if you don't really care like where the market, like it doesn't really matter, just follow. Do we have a new higher high or lower low? We have a lower low here. Here it is. This Monday gave us a lower low in relationship to Friday closing or Friday lows. So meaning that Tuesday, when you come into the market, you're supposed to be looking for sales. According to your setup, look for sales. If you're using AMD accumulation, manipulation, distribution, or maybe the silver bullet Judah swing, you see it was all sales that day because Monday showed us where market was intended into going to. Now, let us come into Wednesday. Now, in Wednesday, this is now where it becomes tricky. We have the low of Tuesday, okay? And we also have the high of Tuesday. So in this scenario, we closed on Tuesday, we closed below the Monday lows, meaning that it was lower low. We created lower lows. So lower lows, we're supposed to be looking for sales. But unfortunately, if you'd have used this criteria of selling based on this, you'd have lost this money. You'd have lost this trade here because you're not understanding liquidity, the overview of what really happened here. Understand that we already balanced a PD array here. So the selling was not really supposed to be happening. So when Tuesday is giving you that sell vibe, and you also lack to understand that Tuesday is a manipulation day whereby we manipulate one side of the market, which is Monday's lows, we manipulate, and now we lie to traders think that we are going lower. If you understood that Tuesday is meant for manipulation, you'd have not taken this into consideration. And also, in addition to the fact that we had a PD array, which is a bullish one right here, you'd have not taken this bearish signal as serious. So meaning coming to Wednesday, maybe you'd have not traded, just never traded, just let it go. So when it comes to Thursday, you want to trade Thursday, we're asking ourselves, how did we close the previous day? This was the low. This was the low over Tuesday. This was the high. So as you can see, we never created any new lower low. We never created it. We never created it. We never created any higher high. So meaning that this is now what I call undecided market. Now, undecided market is hard to trade. Meaning that this day, if you don't know, if you're not an advanced trader, you don't take any trade here. You wait until the next day, which is now Friday. Because now Thursday, you're looking for trade based on this relationship of these two candles between Tuesday and Wednesday. And as you can see, it is undecided. But if you knew what already had happened here, you don't even have to know exactly. You already know that this was manipulation, so you're looking for buys, and you're targeting this PD array above. So when it comes to Friday, you see Friday now we have now a clarity. We created higher highs, which is this one. We created a higher high. Thursday gave us a higher high, and this day high of Wednesday. So once we have a higher high, we're looking forward for buys. As you can see, price opened here. And as we opened here on Friday, we went higher and higher and higher and higher. And guys, this is what you do with all these candles. This it's exactly the same thing. Take a look, for example, this one. This is the high, this is the high, and this is the high. Okay? We closed above it. Not only displaced above it, like we even created high. This is alignment of market structure. We are going higher. You can see that. So the next day, Tuesday comes in, you're just looking for buys, and that's it. And Wednesday comes in and just deliver. But now, once we are here, now a lot of traders were waiting. Okay, now because we have created, it doesn't matter the color of the candle, guys. It doesn't matter. We created a higher high on Thursday in relationship to Wednesday. So this higher high was telling us we're supposed to be going higher. And this is where some traders lose money because they do not understand. They don't really understand the concept here. The concept here is about understanding liquidity and market structure. For example, this was our target. Once we hit this target here, as much as we closed in within the range but created a higher high, meaning looking for buys, this would have been a loss for some traders. But for smart traders, this was the target. Once this one has been hit, you take your profit and wait again and start seeing what's going on, what's happening. So you see, we closed in that range of this candle here, meaning that the market had already delivered. So there was a possibility of us going low, going lower to where? This PDRA. Here we go. You see how this works perfectly, guys. The bullish one. So in case you are looking for, sells or buys, we're looking for sales towards this PDRA here. And once we're here, we're looking for price action in relationship to this PDRA that we have here. As you can see, we dropped down. We created in Friday, we created that lower low finally. After getting that lower low in relationship to this low that is of Thursday, we went lower. And now people are looking forward to selling. You are looking forward to sell. And that sell happened on Monday. As you can see, we opened here. We came all the way down. This was it. This was the target. After this is done, wait for manipulation Tuesday. We manipulate the Monday lows, this one here. You wait for break of structure in lower time frames, you buy. Targeting what? Now targeting these highs, these old highs. This is how you read the markets, guys. I don't want this video to be so long, but I hope this was very helpful. Just understand the concept of higher highs, lower lows. For example, this one we have here, this is a higher high. And now you see some traders were thinking maybe, for example, where we are right now, let me give you guys a signal of what's really happening. Some people are not thinking that now because we created a higher high here. And this high, remember, has taken liquidity above here. And that's why you see this drop is happening. So this drop happening, the next question is supposed to be asking ourselves, where are we headed to? We had a bullish gap here. Take a look at it. Take a look. This one here. So some people are still thinking that because we created a lower low, this one, yesterday, based on Monday's lows, we created a lower low. So some people are thinking we are supposed to be going lower, but no. This lower low, yes, we created a lower low, but now this has done the damage. This already has done what's supposed to be done here. The liquidity has been taken here of that daily fair value gap. And as you can see, we even went back and closed back in within the daily range of previous day of Monday. As you can see, we never displaced below it. Meaning that this day I'm looking for buys. And I expect today to give us a higher high today. And if we get a high today, tomorrow we're supposed to be looking for what? For more buys and so on. So that's it for this video, guys. In case you have any question, just leave a comment. I'll be able to review it and see a way of reaching out and so on. So see you in the next one. Cheers.